All right, it's the weekend. So let's do some review and preview. So again, this is the monthly chart, right? The only one that actually has a dealing range that makes sense. This is the only chart that has a dealing range that makes a lot of sense. And on this dealing range, we are in a buy program with the draw on liquidity as these equal highs and this relative equal highs. So that means we are bullish, which is why on this leg I've been cautiously bearish, very cautiously bearish. Yes, we had a stop hunt at the end of January, all right, and then February I started like this. But in reality, is that the reality of a bullish candle is you have your open low and then you'd have your high and close. So this first week looks to be our open to low. Now there's also this points that the market can come back to retest here. This is a balanced price range on the monthly chart. So there's this point that the market can come to retest. But what if that is not the program? Because again, equal highs were taken out here, right? So this was a run on liquidity, which is a stop hunt, and then we've had a move to the downside. Now it doesn't look like it's much, but from here to here is about almost 380 pips, right? So that's a lot of pips. The question now is, do you think that this move to the downside is over and then the buy program resumes? That is the dilemma here. Now if you come into the weekly chart, now in the weekly chart there are two things. Well, first of all, there's this little imbalance that was filled to this point and rejected up to this point. So it means that there's still a little left. Now this little that is left, I don't know if next week is going to fill it. And also there's the equilibrium of this imbalance. But the question now is, if we get into this equilibrium, then all of this looks like one big consolidation. And I still think that based on the monthly charts, we are bullish, and then this is the final objective of that buy program. So I'm still caught up in this dilemma. I mean, I've been cautiously bearish, and I mentioned that last week. I've been cautiously bearish on this pair, and this is why. And this candle close here, this rejection here, makes me this rejection here kind of gives me more reason to be cautiously bearish. Now again, another thing is that sometime in June last year the market came here, right, which normally a lot of people would have argued that it's time for this to close. But what happened was the market reversed into this area again. But then again, this was the first real close on a weekly closing basis. There was this false break here, but this was the first sustained close on a weekly closing basis above the monthly 75, and then we had this retest to it and back. But this draw on liquidity here had to happen. This run on it had to happen for us to turn around, and then we've done that turnaround. We've had another run on liquidity here, and we're having this. So again, it is not 100% clear, so it's a bit difficult to make decisions on an intraday basis for me. Now coming into the daily chart, I remember last week I talked about this area here being the potential high of the week, and that was exactly what it was on Wednesday last week. So this was the high of the week last week, and this was a very good drop, right? On a personal level, I missed this because I had to make school run, because this was Wednesday New York session. I had to make school run, and I missed it. And in all honesty, I think that miss took a toll on me because I missed that. What was I? Okay, yeah. So what I was saying is, I missed this because of school run, and this was on Wednesday. And I think I just started making bad decisions from there. Sadly, I just started making very bad decisions. But right now, what we've seen here is we've seen a rebalance of this fair value gap here. We've seen a rebalance of it almost completely though, but we've seen a good rebalance of it. And also we had a run through of this daily balance price range here, and then we've had the very next candle close back above it. So that's a bullish sign. Another thing too is that Friday's candle was more than 100 pips. Now at 114 pips, that is, it's a bit difficult to want to see it as just it's a bit difficult to want to see it as just a pullback, because again on the generally this is counter trend based on the higher time frame, based on the monthly charts. This is a counter trend trade. This is a liquidity grab here, and this is a good run on liquidity, and then we've filled up this gap for the most part. So going forward now, what do I want to see next? I want to see how this holds as support. If this holds as support, let's say on Monday, I might wait Monday out just for clarity. If this holds as support on Monday, then I know that okay, this can be the low of the week, and then we take timing, and then the target for the rest of the week would be, if this is the low of the week, then taking all of these out should be the next objective. Up to this point should be the next objective. So depending on how Monday starts, if Monday starts out here as the low of the week, then there will be more movement to the upside. Now if Monday closes back below this point, then maybe we still have some unfinished business down in here, because there's this gap in here. But again, not all gaps have to be filled, right? Not all gaps have to be filled. Like this looks to me, based off of this movement, this looks to me like a breakaway gap. So except if the trend has changed, then the breakaway gap might be filled. But for me, this looks to me like a breakaway gap. If you come into the 4-hour chart now, on the 4-hour chart, this was the fair value gap that got tagged, and you can see it didn't even get to the consequent encroachment. So now that is another reason that makes me feel like this might be the anchor point. And you can see how it swept this liquidity first, this low and this low first, before turning around. So those little hints are what tells me that, you know what, we might be done in here, right? We might be done in here. And if we're going to be done in here, then we might be done with the bear move. And again, this bear move was quite intense, right? This bear move was quite intense, but it looks like it's possible that we're done with it now, and it's time for us to go to the upside. Just to check very quickly on Euro USD. Euro USD isn't giving any moves. So Monday's low to Thursday's low literally is in the same place. So Euro USD consolidated the whole time last week. Okay, now that's a bit weird. So while GBPUSD gave, because this is obviously the high of Euro USD this week, and this is the low of the week, 72 pips. Oh no, this is very, very poor. So I don't have any real business in here, right? Because this is the same thing we're talking about here. Because Monday's low was somewhere around here. No, it's not. No, Euro USD had no blood last week at all. No energy in there. So, anyways, this right here looks to be what should be the low. Obviously, it was the low of last week, but it looks to be maybe the end of this trend. So I'd have to wait and see how this is handled. Another thing about this week is that NFP is on Wednesday. For some reason, I think there was a partial shutdown in the US that NFP was no longer on Friday. So this might also be a factor this week. We've got retail sales on Tuesday. We've got GDP for the pound on Wednesday, and unemployment claims, and then we have CPI on Friday. So it's quite stacked. But let's look at the nitty-gritty of this. Now, again, look at where the high of the week came in, which I was talking about. This right here on Wednesday was what I was talking about. So this was a balanced price range on the 4-hour. You can see that buy, sell, and look at how it found resistance here. Now, it came in here first at Asian session, London session, dead period, and then this was New York session kill zone. And look at that time and price, right? Look at time. Now, because I had to have school run, I wasn't, up for it. I was driving at the time this happened. And the time I got back, it had already gone, and I'm like, you know what? That was just a mess up. If you come into the 1 hour, I'll show you where I probably should have cut this. This is something called ICT unicorn, where, because obviously if you're moving out of here, right, your first balance price range, your first dealing range will have been from here to here, looking to go the steps. But as this movement was very violent, you could see that even a pullback back into this lower 75 DRT here was very difficult. So this right here, this Thursday's drop right here is something called the ICT unicorn, and this came off a 15-minute bearish breaker. Let me go to the 15-minute chart. This right here is a 15-minute bearish breaker. Now, what does that even mean? On the 15-minute chart, right, this at the time was a bullish order block, right? I can delete this, I don't need it. This at the time was a bullish order block, and then price broke this bullish order block, and this bullish order block now became the selling zone, which is what is called a bullish breaker. All right, this right here was a bullish breaker. Another example that I can think of off the top of my head, where a bullish breaker was, where there was a breaker, was here. So at the time when this market turned around here, you can see how this market turned around very, very, very quickly here. Okay, so this became the dealing range high, and this became the dealing range low, right? But you see that it couldn't even pull back into equilibrium and whatever, because this bearish breaker was here, and this was the right point in New York session to hit it to the downside. Okay, so these things they're not too common, but they're there. All right, they're there. This here was a mitigation block, but again, as we keep trading, right, we'll keep coming in contact with these concepts. Another thing too that I would say, again, this was all from here to here, right? So from this high to this low has been counter trend based off the higher time frame. So there was that slight difficulty in reading price or understanding where you are on the market. But there's also another technique to use dealing ranges on 1 hour to guide you. So for example, when this happened, right, you can see that price came back into this extreme premium, okay, and found reason to sell inside of this rejection block. And at the time we had our full closes below, right, or when we broke this area here, this dealing range kept shifting. So you keep using this 1 hour dealing range to guide you. Okay, so in this case, this was the new dealing range. You can see this very quick move. You had a very big retracement above the 50. So back into premium, you had another short to this point, right? Came back into equilibrium, just slightly below equilibrium, but there was a PDI array there that made sense. Okay, that was sold from, and then it came back in here, and then this was the high, right into equilibrium. That same PDI array that sold off. Okay, now when it sold off, it came down in here. This was the lowest point when it sold off, and this became the highest point because of this slight sweep of this high. Right, because of this slight sweep of this high, this now became the highest point. Now we didn't get any pullback into equilibrium or whatever this was. We didn't get a pullback into equilibrium, and then we made a new low. So, but before making a new low, we swept this high too. So this now became the new dealing range. Okay, from here to here became the new dealing range. And another thing about dealing ranges is when you see a big move, let's say you see a rapid move like this, a lot of times price will come back into extreme equilibrium. Extreme premium. That's for a sell program. If you had a lethargic move, slowly 25, 50 back 25, by the time you're expecting a pullback, you may not get into extreme premium. That's just a hint. So anyways, this was a rapid move to the downside, and it came back into extreme premium. So this was, you know, Tuesday's move that for some reason I didn't clock it early, because again, my mind based on the monthly chart was more bullish. So what happened last week was, for a long time I was fighting against the actual dealing ranges. Like I was fighting against the algorithm without knowing I was fighting against the algorithm. And yeah, I got burnt, but not severely burnt, which is why, you know, what's it called? Risk management is paramount. Okay. And then eventually, when it made this high, right? When it made this high, and on the 4-hour, it was, you know, established that, you know, selling should commence. This was our breakaway gap here, and you can see that the market didn't, there was no retracement back into this. So this gap was open. So our breakaway gap, and this was a move to the downside. Now I was expecting that, okay, you know what? Since this move was rapid, how about we get a rapid move back up? But then again, this is where this comes in, understanding that this was our breakaway gap. So to break this low, this is where this, on the 15 minutes, this is where this bearish breaker came in, all right, and then kept going. And then as it kept going to this point here, this now became the dealing range high here. This now became the dealing range high. Why? Because that swept this old high. Now you can see what I mean when I say when the move is rapid, right? When the move is rapid, like you said, see, this was a very rapid move, and you can see that the pullback came back into extreme premium before it moved again, right? Before it moved again to this side, to this downside here, pull back into equilibrium, right? Before it made a new low and a new low. And right now you can see that the market is, you know, about to punch this high. So this is why, for example, now me being bearish at this point is like, let's say I want to be bearish at this point, I feel like it would be suicidal, because this right here looks to be a change, and this looks like a change in state of delivery here. So this is our break of structure here, and then we've kept going to the upside. So it means that eventually all of these dealing ranges will have to change, because for me, I think that the market has turned around. So for me now, this will be my first dealing range, but all of this now will be on the opposite. So a pullback into here and equilibrium or whatever will be nice for me to, you know, get out of here. Another thing too is that because this happened on Friday, I clocked this very, very late. You see this 9 a.m. candle, right? I was looking for selling in here. In fact, I haven't got in too early. What I did not realize that this 9 a.m. candle literally is the ultimate goat, but sometimes we don't see it early. And now when we see it, it's hindsight. But again, this is the whole point of learning. You cannot stop learning. Look at this here, right? This is a fair value gap. Now move it out here, right? Move this one up here. And what do we have? A balanced price range here. And look at that balanced price range. Look at 9 a.m. candle. 9 a.m. candle found supports right in there. It's crazy sometimes, but it's not. Okay. This is no coincidence. This is algorithm's footprint. But in all honesty, I didn't see it. And you know, again, I didn't see it then. I've seen it now. Another thing too is that look at this area here. You see this move here, this fair value gap here that's still open. This is for me my breakaway gap. So I don't expect price to come back in here. I really don't expect price to come back in here. This is my breakaway gap. Okay. So that said, I'm bullish on this market for now. What do I think will happen? Again, maybe back to this 50, and then this right here is my reasoning point on this daily chart here. Maybe just below it or whatever. But now I'm even looking below it. There's really nothing I can see in here, because the entire price delivery here has been efficiently delivered all around those areas. Okay. Let me even see. So again, this was the 9 a.m. candle, and this was just brilliant. 9:45. So this was 9 a.m. Okay. 9 a.m. took a dip more and then closed back above, and this was everything. So this was 10 a.m. entry, and everything will have just gone out here. Yeah, so on the 15-minute chart, look at the 9 a.m. candle. Was, if you're even going to narrow this down to what was the proper balance price range on the 15-minute, it's going to be something about this. And look at that. This is 9 a.m. I probably, if I'm going to be honest, this will have maybe stop hunted me, but the principle is still the same. Now, I think again, this is I really understand why people do not like to trade in NFP week, because the price action is messy, then nice, but then messy. It's just more painful than this, because this was also this had its own fair share of pain, but this was in line with the trend. Because I remember catching this setup very easily. If you remember, this was a very easy setup to catch, right? Very easy, very straightforward, right? This was another one, very straightforward to catch. This was 8 a.m. news. After news, this was very straightforward to catch here. Another one was okay. I remember I tried to buy this because of demand zone that failed. But again, when it came into this area here, this was quite straightforward. No, but this was New York session, so this was New York session move. This one was another one again, London session, right? This was 9:30, so this is 9 a.m. candle, very straightforward to catch. This was New York session, right? Because I caught this, I didn't bother about, but this was New York session, another very straightforward one to catch. So when in line with the trend, right, they're pretty straightforward to catch. When you're counter trend trading, they get more difficult, right? But you just have to understand. But again, I still believe that the trend is back on. All right, so we'll just wait to see how next week starts and settles. Again, next week, what I'm looking out for is the potential that this area holds as support. If it does hold as support, then the trend to the upside continues, and whatever drama happens within this movement to the upside will be easy to identify, and we'll take advantage of it. So all in all, let's go again and look at this. We don't have any news on Monday. On Tuesday we have retail sales at 8:30 a.m. New York. Wednesday is a free day. No. Wednesday we have Wednesday is NFP actually, right? So NFP is on Wednesday. Thursday is GDP, and then Friday is CPI. So Thursday also has unemployment claims. I mean, this unemployment claims comes up every now and then. I could have sworn that I saw unemployment claims this week. Anyways, that's the review and preview. So review, this was a very good hit. This was the high of the week. Very, very fantastic. Look again, time and price. Okay. The high was set, London high was set at 9 a.m. So 9 a.m. candle is very, very important. And then New York session 9 a.m. was the move, time and price. Fantastic. Thursday, London session set the high of the session, and this was the move off. So again, there was news, GBPUSD news, and then 9 a.m. continued to run to the downside. Anyways, so see you all tomorrow. I'll see you all at the week, and I wish every one of us a solid trading week.